productivity in the US, which doesn't seem obvious to me.
Let's bring in our guest on this. He's hankering to get underway himself. Pete McGuire, XM.com. Welcome into the program, Pete. Let's introduce another term into this discussion, the crack spread. It's been around, of course, forever, but it's back as a talking point now. What are you observing? Why is it important? Why is it back on the radar?
Well, good afternoon, Carson and team. You know, one of the great, as far as crack spread, and it's really, it shows us as far as what producers are doing, and of course where the differential is in price. It's narrowing, and I think it's just a bit of a reality check. I listened to what the team said before leading into this particular chat, and where you look at it. Also, not only the crack spread, but from the teapot producers, which are the refineries in China, you're seeing record numbers as far as gasoline and, of course, export markets. So it's becoming very, very tough at the moment as far as the refining side. For refining margins are down 40%, and that shows and that rolls into crack spread. So all of that taken into consideration, we're still awash with oil. It's still a very it's a hard industry at the present time for refiners to make $1 out of compared to last year. And I think leading into Bank of Japan and, of course, what happens with the Fed over the next 48 to 72 hours will give the market a little bit more direction.
Peter, sorry, Steve Johnson here from Forager. Just on that, I guess a local touch to that refining issue where we're seeing all of this Asian overcapacity cause profit margins to get crunched. 3 years ago, we saw Caltex completely get out of the refining business in Australia and say, we can't compete with these Asian refiners, we're going to import it and sell it. Is that one of the best strategic moves we've ever seen in corporate Australia, or how would that business be looking today?
Well, I tell you what, look, our costs to produce as far as labour and so on, Steve, they're the inputs, and that's why it's very difficult to be a competitor, I should say, against the might of, say, Singapore or these regional hubs across Asia. Was it a good strategic move? Obviously, the board thought so at the time. It'll play out in years to come. You know, you look at the Kurnell refinery in Sydney, and it was, certainly employed a hell of a lot of people, and other refineries across Australia. I still believe that we've got huge gas and oil deposits that have been unfounded as yet across all of that basin, and when you consider that we're surrounded by water, it's going to be very similar, I think, to what we experience in Brazil. So I think Australia is going to have wonderful exploration and wonderful energy production over the many years ahead. Was it a good move for Caltex? I don't know, but obviously the board did, Steve.
Let's talk the Saudi push on some form of transparency when it comes to Aramco now. A listing, timing, whether you think this one flies or flops. Well, what are you feeling in the waters?
You know, you've got about 236 billion barrels of reserve. It'll be the largest IPO in history. They're talking about under 5% taken to the market, Carson. Where you look at that as a number, they're realising that they're hemorrhaging money. They were a deficit last year of about 100 billion, 120 billion. That's Saudi Arabia. And to take Saudi Aramco, a small slice as an IPO, it'll be the largest in the world. The valuation of the company is around that $2 trillion mark. And with those reserves, it just gives you, I suppose, a realisation they can take some chips off the table, and of course gives them, dollars and cents back into their budget. So it's a move that it'll be interesting how it plays out this year and next year. But certainly it seems to be gaining momentum and a green light. You hear a lot about it.
This is a really important asset allocation issue for the Saudis. They're sitting there saying we've got far too much exposure to fossil fuels, and that's not what we want. We can either take the profits that we make and reinvest it elsewhere. That's the slow way of doing it. Or we can actually try and sell part of this business to someone else. And I think it's a really logical step for them. It's going to have a very big impact on a lot of other investment markets out there as they decide what to do with that capital. But yeah, we could be looking at the biggest IPO of all time and the world's biggest company by a huge margin. You can add up the next 5 big companies in the world and not get that much money.
So how do you find, in terms of this, how do you think the Saudi will go on the world of corporate governance, the behaviour that the New York Stock Exchange goes? Now, Saudi at the moment are having a few fights with the US around, it's all at the political level, and they are big shareholders in the US in general. How do you think they'll adapt to this change? So opening up to transparency, opening up to the demands of traders, is it something that you think because they're putting such a small amount of the company out, it becomes irrelevant, they don't have to respond? Or do you think that they are looking to try and change something within Saudi Arabia?
Look, that Saudi Aramco business is run extremely efficiently and has been run like a corporate business for a very long period of time. Yes, the transparency is not there, but the way that business is run, the way they allocate capital within Saudi Aramco is of listed company quality, I would say. It's not going to take away the fact that the Saudis are going to control it, and they're not going to give up control of that anytime soon, and they're going to have all this other money with which to have political influence as well. I think that's a huge issue for the world, but it's there whether this thing floats a minority stake or not, in a way.
Pete, hasn't the view been that the Saudis have been driving the price down as a way to combat the US growth in oil and try to take a world dominance, and then sort of lost control of it a little bit in terms of the price action, and then there was a lot of complaints, and now they're trying to show a behaviour around, collusion around trying to get everyone to agree on output? Is there something around the ramifications for Saudi being a global company?
Key driver. Well, when you think about that, Mark, I mean, it played twofold. We saw that strong appreciation, of course, with the US dollar over the same time frame, and a big sell-off. But we also saw that huge production numbers coming from different producers other than Saudis. Certainly the Russians, what was happening with other of the OPEC participants, and of course with the shale, and what's happening with the US producers. So all of that played into too much production in the market, a stronger US dollar, and the price just capitulated, as we all know, from that $90, $100 range down to the mid-20s. I think that it really did surprise everyone. No one really thought that they would see those sort of numbers, which were lower, and we need to take that into consideration, lower than anything that we experienced in the GFC. So it's a differing world now, and you're looking at the refiners, you're looking at certainly a global, in the sense of a global push with producers coming out of, left of field, and being demonstrated with the might of Brazil, and certainly with some of those other OPEC producers, and Iran coming back onto market. So I think they're just trying to get a higher price, naturally, but it's going to be a very difficult one, I think, over the months and years ahead.
Just sort of to compare and contrast as well, Pete, the lessons from Temasek bringing in, as they did once upon a time, former BHP Chief Executive Chip Goodyear to head up investment strategy and chart a new course. That lasted relatively 5 minutes. There was a clash between the family way of doing things and an outsider, and the two could not really be reconciled. Do you see any parallel with the Saudi push on listing? Well, and it's a crude analogy, but walk me through it.
Okay. A couple of things. First off, the Saudi Aramco, a lot of the senior execs, I know that they're schooled across the world. The INSEADs, the Harvards, the Whartons, they go to those sort of executive programs, and they're very highly aware as far as that global push and global strategy. They've got some very, very smart people there. I mean, it's a terrific organisation, and it's been a global player now for the best part of 50 to 80 years. So I think that with the level of integrity that they have and the might of the market, they'll be they're going to say they'll take 1 to 3% of the market, maybe up to 4 or 5. I think going forward, let's see what they've got as far as 2030 is concerned. There may be 10% of in the sense of shares and offered to the market.